Alrighty, folks, we just got the largest negative revision to the BLS report that we have ever had. The previous record was 902,000 to the downside. This morning, we posted 911,000 jobs revised down. They never existed. They vanished. And before you ask, what does it mean? I think the best way to look at this negative revision is blended over time. What do I mean by that? Well, heading into this jobs revision number, you could say that we were adding 149,000 jobs a month, which historically speaking is a very good number. Definitely expansionary, definitely above trend, definitely above replacement, all of that. Good number. Now, after this one revision, that 149,000 has been revised down to an average monthly addition of 73,000. We go from a very good number to I will call it below trend. It isn't quite a horrible number, right? You would have to be in the 50s to be a horrible number. But 73 is a problem. For the longest time, it was assumed by economists that if we were not adding 100,000 jobs a month, that we would actually see a rise in the unemployment rate. Well, folks, we are now at 73. So this number was bad, very bad. Now, again, I thought going into this, it would be even worse. In all fairness, I thought we would be seven figures. I thought we would see a million reduction. So I will take the L. I missed that. 911 is bad, but not quite as bad as I thought it would be. Now, interestingly, the bond market, at least the initial reaction, sent the 10-year down ever so slightly. But as I checked just before starting this live stream, the 10-year note is up. It will be interesting to watch that throughout the day. Is this just chop in the morning? But I'm not sure what that means. If the 10-year note stays up, did the quote unquote smart money expect an even bigger number, much like I did at over a million? So we'll see what happens to the 10-year note. You would expect that the 10-year note, the interest rate would fall. And the other thing you would expect is the odds of a 50 basis point cut would rise. I've been checking the Fed Watch tool here for the last half hour. Let me pull it up one more time. And I'm actually getting a 503 error, right? Service unavailable, which is odd. That just means a lot of people are probably hitting the site. Yep, still 503. Oh, no, here it is. Oh, that's interesting. The odds of a 50 basis point cut are basically 10%. Yesterday, they were 10.5. All right. That's interesting. If you remember last year, we got a 818,000 negative revision, and that is what sparked the 50. So we will see what's going on. It looks like it's a very interesting morning already. But let's get into some other news because I want to shout out Mike Wilson. Mike Wilson is an excellent analyst over at Morgan Stanley. Mike Wilson published something that I have been talking about for 3 years. And that is the fact that I thought the United States economy was in a rolling recession. Rolling recessions are very, very hard for economists to see. It's where different parts of the economy are down and others are expanding. It kind of, the aggregate data shields pain. And if you've been an OG on this channel, you know that I've been talking about, I think we are in our first defined rolling recession. Rolling recession is something we studied in economics. It was definitely more theory because we had nothing to really look at in the data. Well, congratulations. Mike Wilson now agrees with me. We have been in a 3-year rolling recession. But here's the wrinkle. Here's the spice. Mike Wilson is saying it's over. The rolling recession is over. And we are frankly in an early stage bull market. Now, I feel vindicated. I think more and more folks will start to realize that what we have just been through is our first multi-year rolling recession. But I got to tell you, I'm not sitting here today, what is this, September 9th, thinking the rolling recession is over. But I want to applaud Mike Wilson for making that call. He thinks that we will get through all this tariff noise, that the deregulation and whatnot that is coming will take us on another bull market. So again, very, very interesting. Yesterday, I asked all of you if the real estate market in your area, in your buy box, has seen any noticeable uptick. And all I got to say is, first, thank you. Thank you for your comments. I read all of your comments. So rest assured, if you leave a comment, I will read it and very much reply to it. So thank you for that. But all of you are saying that activity picked up, which is exactly what I had seen. Again, I had been deep negotiations with Lennar to buy 3 brand new homes. And unfortunately, we never inked the contract. We were still in counters, and they're all sold. They're all sold. We have been talking for the better part of 10 days, getting down to what I thought was a fair value for doing a multi-purchase, and they all sold last weekend. They're all, I shouldn't say sold, they're all in contract. They could obviously fall out. But yes, they are obviously in contract. And now I have to go look for plan B and see if there's other units I want to buy. So again, it does look like activity is picking up. I do want to thank 2 people. 2 people took me up on my very special offer. Again, folks, remember we are doing our Vegas event, and I am selfishly trying to sell tickets early. I want to thank Jacob and Roosevelt. Both Jacob and Roosevelt bought tickets yesterday. So I will be reaching out to both of them to see which of my books they would like autographed and mailed to them. I will be doing that hopefully sometime today. But if you want to go ahead and buy your tickets for our February event today, you too can get an autographed book. I said we would do the first 5, so we got 3 more spots. Not only will you get an extra special autographed book, but you will get $100 in free courses on Teachable, and you will get a very intimate conversation in October with only people who bought in September. So again, do me a favor, buy your tickets today. Let's get this thing sold out. Remember, Pace Morby, Jason Hartman, and many, many others coming to Vegas to help you move forward. Looks like the stock market is really expecting the Fed to reinitiate a cutting cycle. As of yesterday, the odds were for 3 cuts this year. That would be September, October, and December. But more importantly, the market says 3 more cuts in 2026. Folks, that will bring the Fed funds rate to below 3%. Yes, folks, below 3%. Barclays now expects 3 rate cuts this year, previously 2. The New York survey found that the job market is frankly worse than people think. It's actually the worst probability to find a new job since June of 2013. Yes, folks, 2013, according to the New York Fed survey. I do want to shout out another YouTube creator, Rob from Robuilt. Yes, folks, Rob from Robuilt was gracious enough to have One Rental at a Time on and published yesterday. It was a very important conversation. We talked about the Ryan Pineda interview where he said one rental at a time is dead. We talked about entrepreneurs. We talked about employees. We talked about what it takes to grow wealth. So if you could do me a favor, pop over to Robuilt's channel, watch that interview. Let me know how I did. Specifically, if you watch the first minute, I think Rob did a great job of cutting in I don't know what you call it, a sizzle reel or a hook or whatever you want to call it. I thought the first minute was extremely well done. And yesterday, folks, I told you that I was reaching out to Steadily, again, Steadily Landlord Insurance. They are the sponsor of the Daily Financial News. And they saved me $1,123. They gave me more coverage, And they were able to do this inside of 48 hours. Folks, what happened is I had another duplex come up for quote. It expired on Friday. I reached out to them Sunday. We got talking Monday, and I signed and paid for the insurance. So again, steadily saved me almost $100 a month on one policy. Again, it doesn't always work. They've been about 80% on my portfolio. About 80% of the time, they give me better rates and better coverage. So again, give them a chance. If they help, great. If they don't, congratulations, you already have great insurance. But I got to tell you, saving $1,123 doesn't suck. Certainly doesn't suck. So shout out the team at Steadily. Give them a chance. What else do we got? Let's see. Jeremy Siegel. Jeremy Siegel is always out in the news. The market got exactly what it wanted. The labor market is slowing, and the Fed now has the green light to reinitiate a cutting cycle. Fed rate cut. Ed Yardini is out with a little warning, talking about a melt up in stocks. Basically, the Fed rate cut could cause a melt up in stocks by stimulating an economy that doesn't need it. Wow, Ed, go talk to some mortgage brokers. Go talk to folks in real estate. I would argue that they've been in a depression for 3 years, and it's time for that to end. The small business survey came in and was a noticeable uptick. In fact, the survey now is above their 52-year average at 100.8. The number one headache for small business is labor quality. The largest increase was in expected economic conditions. So small businesses are feeling better and better. We also got consumer credit yesterday, was up $16 billion. That's with a B, folks, $16 billion. Biggest jump in the last 3 months. And if I am right, and we are starting a refi and activity in the housing market, this month could be a whopper. We could grow quite a bit when the numbers are published in September. The last thing I noted was an oddity. It looks like foreign investors now own more gold than U.S. Treasuries. Folks, this has not happened in decades. Now, some of this is, of course, because gold has been screaming higher, now at an all-time high. But it also goes back to show you that foreign investors are turning away from U.S. Treasuries. A lot of that probably happened because of what happened with Russia when we basically confiscated their treasuries. So again, a lot of things going out there in the investment world. And folks, again, don't forget to join school. Here's a sample of just the last things I saw the community talking about. Somebody posted a question about front patio flooring. Again, these are real people doing real things. There's a post about minimum cash flow, post about 1031 exchanges. There's a post about remote management when there is no property manager. Folks, if you are an everyday wealth builder, you want to be in this community. It's ridiculously cheap at 67 pennies a day, $20 a month, 8 different accountability groups, thousands and thousands of dollars in free education, and you get an active community. So again, join the group, and you will not regret it. So folks, again, remember, give Steadily a try. They saved me $1,123 and gave me better coverage, higher replacement cost, coverage for dog bites, all that good stuff landlords need. They are landlord insurance, not owner-occ, only landlords. That's why they work for us. And folks, just have a great day. I hope to see you in school. And please buy your tickets to Vegas. I would love to send out 3 more autographed books. Take care. Later.